Welcome friends to our channel, Give Yourself a Raise, where we help you make smart money decisions. Let's dive into this review of the Essays of Warren Buffett, a compilation of Warren Buffett's wisdom from his annual letters to Berkshire Hathaway shareholders. This 8th edition is a treasure trove of business acumen and investment philosophy, curated and organized by Lawrence Cunningham. The book is neatly divided into sections, each focusing on a different aspect of business and investing. From governance and management to investing, from common stocks to alternatives, from acquisitions to valuation and accounting, and even a section on American history, it's all here. It's like having a personal conversation with the Oracle of Omaha himself, distilling decades of experience into digestible essays. This book is not just a collection of letters, it's a journey through the mind of one of the greatest investors of our time. Now let's dive into the key ideas that Warren Buffett shares in his essays. Before we dive deeper into this video, please kindly subscribe to our channel so you don't miss our future videos. The first section of the book covers governance and management. Diving into this section, we find Warren Buffett expressing his thoughts on the significance of a solid management team and robust corporate governance. He emphasizes that these elements aren't just the backbone of an organization, but also the lifeblood that keeps it thriving in the long run. Buffett, throughout his essays, underscores the importance of a good management team. He believes that the success of any company largely hinges on the capabilities of its management. A team that is not only knowledgeable and experienced but also possesses a deep understanding of the business landscape can steer the company towards sustainable success. But it isn't just about having a competent team. Buffett emphasizes that a good management team is one that is honest, transparent, and puts the best interests of shareholders at heart. But a good management team alone isn't enough. Buffett asserts that strong corporate governance is equally important. He argues that a well-structured board of directors, which acts independently and in the best interest of the company, is crucial. This board should not just be a rubber stamp, but a guardian of shareholder value. A board that asks the tough questions, scrutinizes management decisions, and ensures the company stays on the right path. Buffett's philosophy is that good governance and management go hand in hand. One without the other is like a ship without a rudder, aimlessly drifting and vulnerable to the rough seas of the business world. Together, they form a formidable defense against the uncertainties and challenges that any company might face. So, in essence, Buffett's wisdom teaches us that the management team and corporate governance are not just pieces of a puzzle. They are the very fabric that holds the puzzle together. They are the driving forces that propel a company forward, ensuring its longevity and prosperity. In Buffett's view, good governance and management are key to a company's prosperity. Next, we explore Buffett's insights on investing and common stock. A key to understanding Warren Buffett's success is his unique investment philosophy. This philosophy is rooted in the principles of value investing, an approach that seeks to identify and purchase securities that are believed to be undervalued by the market. Buffett's philosophy, honed over decades, emphasizes a long-term approach to investing. He is known for saying, "Our favorite holding period is forever," which underscores his belief in buying and holding quality stocks for the long haul. So why does Buffett prefer investing in common stock over other types of investments? Well, common stocks offer the potential for growth and profits in the form of dividends. But what's more important is that they represent ownership in a company. This means that as a shareholder, you are entitled to a portion of the company's assets and earnings. Buffett is known for investing in companies that have a strong competitive advantage, or moat, and are trading for less than their intrinsic value. Intrinsic value, a concept integral to Buffett's investment philosophy, refers to the perceived true value of a company, including tangible and intangible factors. It's not always reflected in the current market price. Buffett strives to identify these discrepancies between a company's intrinsic value and its market price. When he finds a company that is undervalued, he sees it as an opportunity to invest. Buffett's approach to investing in common stock is not just about buying low and selling high. It's about understanding a company's value, believing in its long-term potential and committing to it. This strategy requires patience, discipline, and a thorough understanding of a company and its industry. So, what's the takeaway here? It's that successful investing is not about making quick profits. It's about consistent, long-term value creation. It's about understanding the companies you invest in, believing in their potential, and sticking with them through thick and thin. Buffett's investment strategies have proven successful over the years, making him one of the most respected investors in the world. Buffett also shares his thoughts on acquisitions, valuation, and accounting. These three aspects form a crucial part of his investment philosophy and are worth delving into. Starting with acquisitions, Buffett has a clear and concise set of criteria. He looks for companies that are understandable, have consistent earning power, and are run by trustworthy and competent people. Most importantly, they must be available at a fair price. For Buffett, the value of a company is not just in its current price tag, it's in its potential to generate earnings in the future. This brings us to valuation. Buffett takes a long-term approach. He values a business based on its ability to generate cash flow over the long run. He's not interested in short-term market fluctuations, but rather in the intrinsic value of a business. This means looking at a company's fundamentals such as earnings, growth rate, and return on equity. And then there's accounting. Buffett believes that understanding accounting is crucial for investors. It's the language of business after all. He argues that to make wise investment decisions, one must understand the financial health of a company. That includes being able to read balance sheets, income statements, and cash flow statements. However, he cautions that accounting figures are just the starting point. They need to be interpreted. For example, a company might report profits, but if it's not generating cash, it could be in trouble. That's why Buffett emphasizes the importance of free cash flow, which is the cash a company generates after accounting for capital expenditures. Through these essays, Buffett provides a masterclass in acquisitions, valuation, and accounting. He underscores the importance of understanding a business thoroughly before investing in it, and reminds us that price is not the same as value. His wisdom serves as a guide for investors, be they beginners or seasoned pros, in navigating the complex world of investing. The book concludes with a section on American history. Here, Warren Buffett reflects on the past to shed light on the present and predict the future. He uses historical events as a canvas, painting vivid pictures of economic trends and market behavior. To explain these concepts, Buffett doesn't just list out dry facts and figures. Instead, he breathes life into them, grounding abstract ideas in real-world events. For instance, he might talk about how the Great Depression impacted investment strategies, or how the post-war boom led to unprecedented growth in certain sectors. Buffett's approach to history isn't just academic, it's deeply personal. He reflects on his own experiences, drawing on his years of investment to provide a unique insider's perspective. This isn't a dry textbook, it's a living, breathing narrative, one that offers valuable insights for anyone interested in understanding the forces that shape our economy. Now, Buffett isn't just looking to the past, he's also looking to the future. And here's where his trademark optimism comes in. Despite the ups and downs of the market, Buffett remains steadfastly confident about the future of the American economy. He sees potential where others see risk, opportunity, where others see obstacles. And this isn't just blind faith, it's based on a deep understanding of economic trends and market dynamics. In the end, Buffett's understanding of American history isn't just a lesson in economics. It's a masterclass in optimism. He shows us that while the market may fluctuate, the fundamentals of the American economy remain strong. And that, in the end, is the key to successful investing. Buffett's understanding of American history provides a unique perspective on the country's economic trajectory. That wraps up our review of The Essays of Warren Buffett. We've journeyed through the wisdom-filled corridors of governance and management, investing and common stock acquisitions, valuation and accounting, all grounded in the historical context of the American business landscape. Each idea presented in this book is not just a theoretical concept, but a practical tool that can be applied in the real world of business and investing. The wisdom offered by Warren Buffett through these essays is invaluable, whether you're an industry veteran or a budding entrepreneur. This book serves as a testament to Buffett's investment philosophy, reassuring us about the future of Berkshire Hathaway and providing a comprehensive narrative of his business approach. So, whether you're preparing for a career in business or looking to expand your investment portfolio, the knowledge and insights offered in the essays of Warren Buffett are sure to equip you with the tools you need to succeed. Did you find this review useful? What money topics would you like us to cover next? Please leave a comment below. We value your feedback and look forward to hearing from you. Thank you for watching. Please subscribe to our channel.